And I'm going to introduce our next company, our next several speakers. So, first up, Harborside. Harborside's been in the news a ton lately, and here to talk about it, Matt Hawkins, good pal of Benzinga. How are you, Matt? You all right?
Right. Hey, Patrick, how are you, bud?
Oh, great, man. Great. It's a beautiful day here in Michigan. We're finally getting some of that summer weather here. So, not all of us can enjoy Texas like you can, my friend. But we'll take what we can get.
No. The upcoming months for you are a hell of a lot better than the upcoming months for me, I can promise you.
Well, I hope that AC is tuned up for you. How about that? Well, listen, you guys, Matt Hawkins is with us. He's the chairman. I believe we also have Tom Giovanni, who's the CFO of Harborside, and Roman Stahl, VP of M&A and IR. So with that, I'll let you guys dive right in, and maybe we'll have some time for some questions.
Perfect. Well, thank you. We're going to do this a bit differently. I'm going to kind of give an overview of how we got to where we are now, and then a little bit of the presentation. But a lot's happened. I'm the founder, managing partner of Entourage Effect Capital. We're a long-term investor in Harborside. We led a dissenting shareholder movement at Harborside back in the fall and took over the board with the mission to become the premier single state operator in California. And we listed out a whole slew of initiatives we wanted to accomplish, and we've recently checked a bunch of those off the board as we've got to where we are now. Harborside, as most people know, is one of the oldest dispensaries in California. We're now completely vertically integrated, and I'll explain that why. We've got 5 retail locations, 200,000 square feet of cultivation, almost 40,000 square feet of processing. Our market cap is $119 million. We've got close to $72 million in standalone gross revenue, $7.4 million in EBITDA, and we've got $31 million in cash. We're extremely undervalued right now, and we'll explain why in a second. This shows kind of the storied history all the way back to 2006 when Harborside, the health center, was established in Oakland. It's the flagship location of our 5 dispensaries. We've launched brands since then. We've built the greenhouses. We've refreshed the board of directors, as I mentioned. We raised the $35 million PIPE. We made a strategic investment in Loudpack. We raised $12 million, which was one of the first commercial line of credits in cannabis. We closed on Sublime, and we closed on our Salinas campus as well. In addition to that, we engaged Heidrick & Struggles to find a permanent CEO to replace our interim CEO, Peter Bildo, who's done a wonderful job navigating us through some choppy waters. We're really in a position now where we're poised to continue on the big goals that we set back in November. I mentioned all of these items we just accomplished, and Sublime was something we've been working on, but it's only the first of many acquisitions that we have in the queue. It was bought for less than 2 times revenue. Gives us a complete vertical integration. It's the largest pre-roll brand in California. In-house statewide distribution, serving 526 active customers, almost 70% state coverage. One of the things I want to mention about that as we move forward is the fact that California, believe it or not, is the additional growth potential that exists here is there's only 2.2 stores per 100,000 residents currently, and that's well below Oregon, Colorado, Nevada, and Michigan. And so the fact that we have that history, we know the regulatory framework in California cold. We've got a board that knows M&A. We're showing that with how we closed on Sublime and are going to close on a couple others shortly. And we're extremely excited about the prospects that we have going forward. This is what's really important to us, is that in addition to our 200,000 square feet of canopy that we have in cultivation, the Sublime acquisition gives us 38,000 square feet of manufacturing and processing. plus the all the trucks, the branding, and the retail we have. It's a complete vertical integration that now we're just going to build out further to become that preeminent operator. Efficient cultivation. We produce 20,000 square pounds of annual flower. Diversified canopy, both light deprivation technology. We have supplemental lighting. We have state-of-the-art Dutch Vindler greenhouses, and we're scalable. We've got 47 acres of prime Salinas farmland. We've also got an experienced team that both knows cannabis and also big ag backgrounds. So the value through processing and statewide distribution is exactly that. It's what we wanted to do from the start, is to become that vertically integrated player. We had two prongs of that with cultivation and retail. Adding the processing manufacturing just completes that cycle. You can see all the different locations we have. San Francisco is going to open shortly. They're all high traffic locations. The vertical integration allows Harborside to best promote our brands at retail. And the M&A pipeline is strong, as I mentioned. Experienced management team. We bring the Sublime team with us. Amr is the Sublime CEO. You can see he has experience at Amazon with supply chain integration there. It's a huge boost to our management team. A very purpose-driven board of directors. Andy Sterner is my partner at Entourage, but then we handpicked the rest of these board members due to their M&A experience. We're also very active in the community of Northern California. And then our results: 5 quarters of positive EBITDA, trailing 12-month adjusted EBITDA of $8 million on revenue of $62 million. So we're continuing to grow, and that's without adding any of this accretive M&A that we have in front of us. Relative to the peers, we have an incredible opportunity for value. Even though we're still compared to mid and small cap operators, we're well positioned to have significant growth based on where we are now. Capital structure is pretty simple. The enterprise value, we believe, is incredibly low for our revenue right now and our earnings, but that's okay. This isn't a play for right now; it's a play for what we're doing as we go forward. That's all I have for the presentation. I want to open up to Q&A, and we look forward to working with you individually and collectively as we go forward.
Jumping back in here, my friends. Okay, so Tom, Roman, feel free to jump in as well. You guys throw your questions in the chat for Harborside. Really quick, I don't know that we did this, but the ticker here, HBOR on the CSE, and Matt, correct me if I'm wrong, HBORF on OTC. Is that right?
That's correct.
Okay, good. So you guys, the market seemed to react positively to the news of these two recent acquisitions here, the Salinas Production Campus and Sublime. Any more detail that you want to share with us? Anything specifically you want to share about the importance of the acquisitions for Harborside and how that's sort of changing the game for you guys?
Sure, I'll hand it over to our CFO and let Tom opine on a couple of those.
Thanks, Matt. Yeah, so for us, Sublime, I think it'll be a game changer for us because in addition to the really strong brands that Sublime has, they've got their biggest brand is called Fuzzies, which is a brand of infused pre-rolls. They almost invented that category in California, and they are the market leader in that category, and they've got a really strong pre-roll record in the state. We've got a couple of in-house developed brands on top of that. One is Harborside Farms, and the other one is called Key, and we'll tag our brands onto their distribution and take all three of those brands across the state. They've got about 70% penetration across the state. As we mentioned earlier, over 500 active accounts. So we're really looking forward to tagging on their distribution. And then the other thing that's really synergistic is we can lower their cost of raw materials because we can basically now start moving the production from our campus in Salinas, the 200,000 square feet of grow that we have there. We can take that biomass and start sending it over to Sublime and lower their cost of production. So we're going to see a pretty big EBITDA lift is what we expect from this. And as far as the farm goes, when we put together the line of credit with the bank, I mean, we're out with an initial interest rate of 5.75%. So that's a super attractive cost of capital.
Wow. Yeah.
That's probably the lowest in the industry in the United States that I'm aware of right now. And so, by using that capital to acquire, basically it improves our cash flow. It allows us to, invest more as we continue to scale the business. And we become, even more vertically integrated. We don't need to rely on anyone else to produce flower. So we're super excited about both of those things. And it really does set the stage for Harborside as a platform company to continue to scale inside of California. And a lot of people might not know this, but when you look at California economically and geographically, it's as large as 2 or 3 other states. It's a huge marketplace, which is why we're doubling down on our single state focus right now. There's a lot of ground to be had in California.
So let's dive into that for 1 second, because California is a market that we probably don't talk about enough. It's almost like a foregone conclusion that California is a crazy good cannabis market, right? But let's talk about specifically any challenges that you guys foresee in that market. Supply chain, brand strategy, right? There's a lot of California players. I'd be interested to know what specifically you guys are seeing as potential catalysts or opportunities, that could result from some of those challenges.
I'll start off, but then Tom, I want you to chime in. The good thing about where we are as a company is that, I mentioned this in the presentation, is that we know the regulatory framework in California cold, probably more so than any other operator in California because of our longevity. We know how licenses are issued. We know what's on the. We know how to navigate the choppy regulatory waters. We can handle living in the crazy taxation world that exists in California. But we're also figuring it out for the MSOs ultimately. I mean, they are going to enter this space in a big way. There's kind of some toe dipping right now. We want to pave the way for the MSOs to have an offering on a silver platter, whether we end up exiting to one of them or partnering with one of them as we go forward. Or heck, maybe it's even somebody, post legalization. Who knows what's going to happen? But we know it cold because we've been doing it since the early 2000s. So Tom, do you want to add any color to that?
Yeah, I mentioned earlier, California is like 2 or 3 other states. There's over 400 jurisdictions inside of California, and right now only about 30% of them actually allow cannabis. And the way the licensing works in California, you need local approval first, and then you get state approval. We sort of have that locked in. But as I look at it, there's a lot of growth opportunity. There's no single dominant brand yet inside the state. It's a rather fractured market. When we talk about Sublime, they have probably the largest name in pre-rolls right now inside the state. So they're one of the few exceptions with a very, very recognized brand that's across the entire state. But we have a lot of opportunity as we look at, we have a relatively strong presence in Northern California. There's a lot of growth opportunity in Southern California. And we sort of have the geographical width of California dialed in. And, again, it is a big state, and there's a lot of opportunity here for sure. There's no question about it. You do have, different than other states, right? The market in California has existed for a long time. So the people that basically grow here, it's probably the best place in the country to grow. You have the best growers here. My personal opinion is, some of the big brands in California will become national brands as the industry continues to evolve and mature. And they say, right, as California goes, so goes the nation. So I think you'll see a lot of the industry leadership start to now scale outside of the state as well.
Yeah, that's exciting. That's exciting. I think from, and Matt, you can probably speak to this, Tom, you too, but when it comes to what we've seen over the last several years in this industry, obviously it's been a roller coaster, right? Access to capital has gone up and down. Those companies with cash in the bank seem to be situated better. You guys have, now I don't want to misquote this, Matt, 30+ million cash in the bank. That seems to be a good place to sit right now. Is there anything you want to tell us about what's next for you there? Are there other potential acquisitions coming? What are you looking for in terms of what to do with that money?
Yeah, no, I mean, look, the reality is that we are in a good place from a cash position. We haven't spent any money because we're cash flow positive at this point. So we're in a good place operationally. Got a lot of things we're working on to make that even more efficient. We did spend some money in the first quarter on consulting to figure out where we can be more efficient. And that's good because now we're going to be able to implement those strategies going forward. I think that, as I mentioned in the presentation, we are squarely focused on accretive M&A to get to the next level. There's also the organic growth that we seek on a quarterly and yearly basis, just through additional licensing and efficiencies within our wholesale operations. And having Sublime in tow now will only help that. We also have, one thing I failed to mention is that, our founders were obviously very outspoken about fighting the government on 280E. We're just not doing that anymore. We're way down the road of just, settling with the IRS, paying what we owe, just like every cannabis company should. And the reality is that hopefully one day in the not too distant future, that's going to change. And these punitive and penal tax regulations that we face as an industry will dissipate. And it brings up an interesting point, and I say this all the time. Cannabis companies are operating in the most inefficient times that they'll ever be operating in, both from a tax perspective and a cash management perspective. We got a line of credit that was commercially viable, but that's a rare occurrence. We like any cannabis company, we can't get AR lines or really true working capital lines to help us manage cash flow. I mean, all these things are on the right on the precipice of occurring, and it's part of these tailwinds that exist in the industry. And that's why I just think that getting in at some of these companies, Harborside included, it's the second or third inning here, and the upside is tremendous. And so I say this all the time. I don't know of another industry that has this type of opportunity. So hope that answers your question, Patrick.
It does. And I want to, I want to sort of further break that open for a second, Matt, because I think it's interesting what you're saying there about, a lot of this industry started with activism at its roots, right? And especially the founders of Harborside were in it from the beginning, and they're still in the industry, right? Yeah. In various capacities. And I think it's very interesting to hear you say, hey, we're not going to fight the government. We're going to work with the government. We're going to try to change things in a different way. We're going to wait for those catalysts to come down the pike. And obviously, I know we're all expecting some of that with the MORE Act, the Safe Banking Act. And it sounds like we're going to hear more about that today. But I think it's really interesting to hear you say, especially from a corporate perspective, hey, we got to operate under the conditions we've been given, and we're gonna sail that ship downstream and see what happens, right? And it certainly seems like you're better positioned. You correct me if I'm wrong.
No, you're 100% right. Look, I love the D'Angelos, and they've been very, very beneficial to this industry. Obviously, they founded this company. We owe them a lot. And I think, and they're large shareholders of the company. I think Steve is supportive of what we're doing. It's just we had a difference of opinion on how we handle things from an activist standpoint. And it really is. It's not really even a difference of opinion. It's just a matter of where we were as a company. Right. Another example. I mean, I mentioned the CEO search we're conducting, and by the way, we're very close to making an announcement there too. We engaged Heidrick & Struggles to execute that search for us, and I'm on the compensation committee at the board, and so I've had first look at a lot of the resumes. You wouldn't believe the amount of talent that we're seeing coming into this industry. I'm talking about brand names from retail, CPG, just brands in general. I mean, it was. I mean, I got so excited looking at these resumes, thinking, "Holy
how cool
cow,
is that?"
These are C-level people from top tier companies that want to get into our business, and so it's happening right before our very eyes.
That's super exciting, and that's fun. I mean, we don't often get the peek behind the curtain in these executive searches, so that's fun, Matt. Thanks for sharing that. It sounds like we've got a question coming in from the chat right now. I hope you don't mind me asking this. Hi, Matt. Thanks for sharing. How many pounds of flower are you guys projecting to cultivate annually from your 200,000 square foot facility? What percentage of that will be sold wholesale versus through your retail stores?
Tom, you're well versed at that. I'll let you attack that.
Yeah, sure. So out of that facility this year, we're expecting 20,000 pounds of flour to come from the facility. And this is where, so historically, Harborside used about 10% of its own production on our own retail shelves, right? And so we would package it into CPG and sell it on our own shelves. We had a small distribution operation. We're in the process of reforecasting that because we expect that the amount of self-consumed flour is going to go up dramatically. And this is one of the reasons that we're looking to expand as well, because, you know, we don't really want to be a wholesale production company that's selling into the market. You don't get a big lift on enterprise value through selling wholesale flour.
Sure.
You know, the big lift comes from transforming it into something that consumers want. And so, you know, with Sublime and some of the other things we're working on, we're going to divert a lot more of that flour. And I expect instead of 10% self-consumption in our own stores and distribution, that it'll grow to somewhere close to 90 to 100% over time. That is going to be the hedge. And, you know, the other thing, if you watch what's happened in the legal markets as they've gone adult use, about 4 or 5 years out, you start to see a glut of production, wholesale prices start to come down. And really the hedge against that is to have a strong brand and actually transform your product into something else and sell it through the CPG channels. So that's really what we're working on. We do have a couple of greenhouses that we've started production on at the campus in Salinas. And we're now going through the process to see whether or not we want to finish those greenhouses and expand the capacity there as well. But we're working through that right now, and we may expand our overall capacity at that facility as well.
I want to point something out really quickly, especially for the audience listening. What Tom just said there is key, because as we start to see this industry shift, and especially as it gets more competitive, prices will come down, right? So companies will have to battle that by again hedging their bets, you know, putting emphasis on brand, on, you know, how their retail footprint differs from the next guy. So really interesting that you said that, Tom, and thanks for that. Guys, we have about 1 minute left. Any last words to leave our audience with today?
No, I think if anything I say is going to be repetitive, just keep a close eye on us in the next couple of months. It's going to be real exciting.
All right. Well, thank you, Matt, Tom, Roman, all from Harborside. Roman, next time we'll let you talk, man. I'm sorry. We you know, we were having so much fun with Matt and Tom here. Guys, have a great day. I'm sure we'll see you throughout the conference, but please let us know if you need anything. Folks in the chat, it's HBOR. It's a pleasure. HBOR, HBORF.